Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to look at the next COT report, which is the number 6 of 2018. Before I go into the review, I'd like to remind you guys we have a new service out. It's called futurestradingguides.com. If you haven't yet checked it out, please do so. We have a free trial period, and you can check the service out over there. You can see our results for the past day, how our targets, how our scores were effective. So all that on futurestradingguides.com. Please give it a check. Let's go back to the COT review and continue on as usual with changes in commercials positions. As you may see, we have the Dow on top of a list with a 57% change in commercials positions. Huge change, of course. We're not surprised after seeing what happened to the market last week or this week. It's still Sunday. So you can see this change is definitely the largest change in the past 52 weeks. It is a huge bullish change signal, suggesting prices could increase in the next couple of days. Jumping to the 5-year chart, you can see how extreme this market is. Here we go. You may see that we have that change size visible on this 5-year chart as well. You can also see that we've just moved away from this bearish extreme level, which does not mean we can't go back to it. If prices would start to increase, that could be the case. It's of course hard to tell what will happen in the next couple of weeks. One thing's for sure, we have the most bearish extreme level back over here, which was signaling a top for many weeks. Of course, without any reaction from price, you may see it just went higher and higher. So stress levels have built up unquestionably to very large levels, and what we see now is the effect of that in the market. So stress levels, of course, will always decrease if the price starts to change its trend. The next market is Palladium, where we have a 37% change in commercials positions. You may see that change over here on the chart. Again, this is a bullish change signal, possibly the largest in the past 52 weeks. And of course, we're expecting it to have an effect on the market in the next few days. Jumping to the 5-year chart, you can see that we're more or less in between the two extremes. The most bullish extreme was actually, as you may see, if you look at it on a wider perspective, correlating with the lowest prices on this 5-year chart. And now we're more or less in between the two. So we had this relatively large bearish extreme back over here just a few reviews ago, and that pinpointed the top in Palladium, which means this was an effective signal. And as prices are declining, of course, the stress level is declining with it as well. The next market is lean hogs, where we have a 30% change in commercials positions. Again, a bullish change signal, and not a small one. Much larger than average change size, possibly pushing prices higher in the next few days. Now, this 5-year chart will give you a picture about the stress levels in the market, which, as you may see, is not that large. It's more or less in between the two extremes. So not much help from the COT report this week on lean hogs. So let's just move on and have a look at large speculators, COT Extreme, and open crude oil, where we have this all-time COT Extreme. Now, for those of you who are following my COT reviews, of course, this is not a surprise because crude oil has been producing these all-time COT Extremes for many weeks now. The only big difference that we have now compared to the last few reviews is that we have a significant decline in the market, which means possibly we have reached a top over here, meaning this extreme signal has eventually taken its effect and pushed prices lower, which means if this trend continues, the decline in stress levels should happen as well. So we're going to see the large speculators decreasing their net long positions, and commercials decreasing their net short positions as the price of crude oil decreases. The next market is cocoa market with a 64 report extreme, so not a big one, but nevertheless, let's just look at it. It's visible over here. So that was 64 reports ago. It is a bearish extreme relatively, of course, but you have to look at the wider picture, which means if you look over here, you can see that mid 2017 we had this pretty large bullish extreme in the market, which of course managed to stop the decline in prices. And since then, of course, we have seen a few occasions when the price started rising. Of course, there has not been a major change in the trend yet, but that does not mean it cannot happen in the next couple of weeks or month, which if would happen, of course, we will see the continuation of traders' positions changing in that direction, meaning large speculators would start increasing their net long positions, and of course commercials increasing their net short positions. Dow, we talked about that. The S&P 400 will be our next and last market for this COT review. Jumping to the 5-year chart. Well, it's only a 32 weeks extreme. So actually, if you look at the chart, we're still at bearish extreme levels. Of course, if prices continue their decline, we will definitely see traders changing their positions, and we will see eventually a bullish extreme targeted in the next couple of months. I would say a month basically, because as you may see, these extremes change pretty slowly from bearish extreme to get to a bullish one. That would take a couple of months actually. So that was all for this COT review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.